exchange, you can go on it, give them your local currency, get a foreign currency, or you give them a foreign currency and you get a local currency. That's basically what we mean by over counter. And the foreign market is characterized by high liquidity with an average daily trading volume of 6 trillion. So averagely every day we have 6 trillion worth of transactions in the forex market every day. So it is a very busy market. It's the biggest market in the world because no market would you see about 6 trillion being traded every day. And the fact about forex is that traders in the forex market, they always aim to profit from fluctuating exchange rates. By buying currencies they expect to appreciate and selling those they expect to decline. Obviously, if you buy or if you're trading a currency against the other, the basic aim is for you to make profits. And in the fluctuations, there are so many factors that come into play that cause fluctuations in the forex market. You have economic factors, you have geopolitical events. Economic factors, I mean stuffs like GDP, CPI, even central banks coming to like speak based on the situation of the economy. You have geopolitical events. For example, now, let's say there is war somewhere now. For example, when the Russian war started, the
Sorry,
moment
Tayo,
had the Russian.
your can't really lagging again, lagging at this point. Try speaking again.
Can you hear me now?
Yeah. It's just kind of lagging.
These network issues. All right, so I was saying I was talking about geopolitical events like war, and most time they decide that it's going to war, it affects some currencies. Like when Russia went to war, it affected the Russian ruble. It declined for a while, then it appreciated again, and so many things. You have central bank policies. We also have market sentiment. A lot of things come into play when trading forex. So as a forex trader, you have to look out for all these things to be able to position yourself properly. And a lot of people use all these fundamentals to trade alone. So maybe people follow example, the US central bank, you get to know their policy or you get to get know an announcement from them and based on what's announced. So a lot of people use a lot of things to trade in forex. We have technical analysis, we have fundamental analysis. So basically technical analysis is basically you trading based on past events.
Sorry. Before I just want to do something quick before you continue. So
All
basically,
right.
what he's saying now is that these charts you see, candles you are seeing on your screen, everything you are seeing, it's um not just moving on its own. Understand? It's not, how would I put it? Not AI that is controlling it. Not just lines moving up and down. These are actual prices changing, and the movements you're seeing, actual people that are buying and selling. For those beginners that don't really know what is going on, those charts you see, those are people buying and selling. The movements, people are dragging price. People are buying, big institutions, hedge funds, governments, and us retail traders. Everybody's price. And so basically, trading is about finding the direction. So yeah, we're going to go into that, but what I'm saying now here is that price is not just moving. Like the whole chart is not just moving on its own. It's not like it's moving. Maybe an AI is controlling, and you are just betting and actually being controlled by institutions, by a lot of people. I want to just break that part down because people don't really understand. I'll continue there.
All right. So next, we'll be moving to what in forex. So based on the definition we gave, or I gave rather, there are majorly currencies that are traded in forex. I know you would have seen stuff like people trading gold, silver, oil. Yes, you can trade them in forex, but majorly always trading currencies such as USD, that's the US dollar, EUR, that's the euro, JPY, Japanese yen, GBP, British pound. You will also see AUD, that HF, Swiss franc, and many more. There are a lot. There are really a lot. You can even trade as like Polish zloty, and many more. It's just that they would appear as minor pairs, and personally, I would not recommend trading them. We will go deep into that later during the bootcamp, but for now, I just need you guys to understand that in forex trading, we mostly trade currency pairs, and you would mostly see the chart and you see things like Euro USD, then you see maybe 1 point something. Basically, what it is in forex we have currency and we have the counter currency. I mentioned earlier, forex market is the largest financial market in the world because no market trades 6 trillion daily volume anywhere. As long as it's a financial market, nothing trades up to 6 trillion volume. I know some people would say the crypto market is also big, but the truth is it doesn't trade this much volume daily. I doubt the crypto market is not even up to 6 trillion. Talk less trading 6 trillion daily volume. I hope we understand that. And honestly, it is always very hard to pinpoint the exact size of the forex market because it is a very large market. It is really, really large. Literally every single country in the world is in forex one way or another. As long as you have a bank, as long as you have central banks, you have people trading, going out, coming. Not everybody in a country will hold the local currency. Some people will still hold currencies from foreign countries. So one way or another, most citizens of a country would engage in foreign exchange. So basically, it is a large market. There is no size to it. Everybody is involved. Everybody can be involved, and it's really open to everybody. So let's move to the next point. So yes, let's move into currency trading and indices. So as we mentioned earlier, currency trading, forex trading, is the buying and selling of currencies in the foreign exchange markets. I think I've talked about this, but now something we call synthetic indices. Now, unlike forex, where it is buying and selling of currencies, these ones, synthetic indices, they are basically financial instruments that they derive their value from the underlying assets, but they do represent ownership of those assets directly. Is gone. So synthetic indices are financial instruments that basically track the movement of various assets. As currencies, we can have stocks as well, even commodities, as well as indices. But unlike traditional indices, synthetic indices are created synthetically by financial derivatives rather than compiling actual assets. I hope you guys understand that. But let me repeat myself again. Synthetic indices, in summary, they are just things that just indices created financial derivatives in summary, and their price movements are always based on assets like currencies, stocks, commodities, or even indices as well. And in the difference between forex trading and synthetic indices, let's judge it based on trading mechanism. In forex trading now, we have participants engaging in one currency in hopes of making profit mentioned earlier. But in synthetic indices, they are typically traded through derivative contracts offered by brokers or trading platforms. Unlike forex, we are basically dealing with the currency of a country, or basically currency of a country. In synthetic indices, you're basically dealing with brokers and trading platforms. I hope you guys understand that. And these contracts, they always derive their value from the performance of the underlying assets they represent. So in Forex, you're trading one country's currency for another, but in synthetic indices, you are basically trading contracts that derive their value from the performance of underlying asset. Sorry, I'm getting messages that the slides are not changing. I hope you guys can see it. All right, so in terms of risk, one thing would always encourage is you should not risk more than what you can afford to lose. That doesn't mean you're going to lose your money in Forex. You have to make cash. But then we also talk about risk management in Forex, because the truth is you can't always have losing trades. Have losing day, you can even have the month table. But the point is how you manage your risk. Both Forex and synthetic indices are high risk. You have high chance of losing your money. You have high chance of making a lot of money. It just depends on your risk management. In Forex trading, we have high risk, high liquidity, high volatility. The rates are always constantly fluctuating depending on economic and geopolitical events. You can have news come out and your USD will just jump. You have news come out or an event come out and you just see that maybe dollar rises. Let's say news that supports the dollar will rise. News that doesn't support the dollar will fall drastically all of the time. We have volatility like that in Forex. Synthetic also, we also have volatility as well, but the level of the risk can vary depending on the synthetic index you're trading. So some might be very volatile and some would not be as volatile. Once we are getting into synthetic indices, you understand more of what we are saying. Both involve risk, both involve volatility. They just vary. And also, when it comes to regulation, the Forex market is strictly regulated because we are obviously dealing with banks and central banks and countries. It is strictly regulated. Compared to synthetic indices, they as Forex, there is a very huge difference. So basically, in summary, both Forex and synthetic indices involve speculative trading of financial instruments, to be very honest. And they also differ in terms of underlying assets, trading mechanism, as well as risk profiles, and also regulatory oversight. And one thing traders should know is that you should also carefully consider all these factors when deciding which market you want to participate in. You can do both. You can do one of both, but it solely depends on your risk appetite. You can do the two of them. You can choose to do one. It just really depends on you. So let's move to the next one. For this one, I would be handing over to Dave to talk more on this.
First of all, your slides are not. I want to let me see if I can sort out the slide before we actually move on. Before we move on to next phase, anybody like I've even been following what he's talking about, like basically in summary of everything talked about. Trading is not, how will I put it, not betting, not 40 bet or naira bet. Actually is an actual business, way more than just, like I said, charts, price moving up and down, and you just have to buy and sell to see go up or go down. You can basically make money trading technical. You can make money trading news effect. In fact, you can literally just be a fundamental trader, just be following the news, what is happening in the country. Yeah, I feel like it's, especially if you're a long-term trader and not a scalper, you can follow the news, where the chart is going, and just trade with it. I mean, that is one of like the safest way to trading the news itself. So, like you said, volatility. The summary of everything is says volatility. Indices trading different from the actual forex trading. Forex trading, affected by fundamentals, while synthetics not affected by it. That is kind of like I call it personally like a straightforward way of trading. And yeah, most people not using synthetics because fundamentals don't really affect synthetics as much. So yeah, to be sure everybody is following. Do you? I mean, if you understand what he has been saying so far, I mean, you're not asking questions right now, but if you do not understand 100% how these forex markets work, like what is it about, who is controlling, who are the big dogs behind price movements and all of that. If you understand so far what he has been saying, you can put up your hand so I know. Important because we might still brush on the same topic again, just to make sure okay, everybody is. So if you have been following and you understand that okay, yes, this is what the market is really about, not just a gambling platform, then you can just put your hand up. You understand? Yes, I'm seeing somebody's lost with the volatility. Just put down your questions. We're going to ask later. Rush everything. That is the point of the bootcamp. So I'm just seeing a few people raising up their hands. Also Tayo was lagging at some point. So that's why I'm asking this question. Before I even go into the retail edition, I don't know, okay. Before I go into the retail edition, I want to go back. Let me get the slides myself and sort it out. So I just brush through it one more time. So everyone, I just want to make sure everybody understand what they are getting into. Trading aspect before we move into the retail aspect. You understand? So I'm trying to get the slides. If you feel like you're going to forget your questions, you can put it in the chat. You can put your questions in the chat. Like you're going to forget your question, please write it down in the chat. It's very important. Oh, I'm sorting out the slides, but before then, so I and Tayo are going to brush through it and just to summarize everything one more time. And like I said, if you are still lost, you can put down your question and write it down because there will be a question and answer session. You can move the slide to the second. You can move to the second slide. And then again, like we are going to be sending you a PDF of everything we have been talking about. And like I said, even after this whole meeting, the class and everything, we are going to every month we are going to be having live classes talking about this because we cannot just learn everything now and understand the whole concept of just a 4 week camp. We're going to be having a class every month, once or twice a month. So just to summarize everything he said one more time before we move into because we have issues slides. Just to summarize everything, forex trading, like I said, because this it took me time to actually understand this thing because the first time I started trading, that was like 4 or 5 years ago. I actually thought prices were just controlled by computer, by an AI or something. Not controlled by any computer or an AI. It's controlled by people like you and me. When you see the price go up, it's somebody that is buying it. When it's going down, somebody is selling. You understand? Same thing with volatility. But then again, it's much more how would I put it? Much more controlled, much more mitigated. Not everybody that know. That's why it's way better to analyze on it's way easier to analyze on volatility on synthetics compared to forex. I mean you can have a perfect setup now, for instance, on um let's say maybe I'm analyzing gold, for instance. You can have the perfect setup that always works. And before you know it, the news come out, maybe NFP, and before you know it, you're wondering what went wrong. All right, also one thing you should know again is that when you're actually trading technicals, especially when you're trading technicals, fundamental analysis, like that's the news and everything. Only just it's kind of like acts like a catalyst, pasting technicals. Understand? So if you draw your analysis and it's going up, when the news come out, just hastens it. That's what happens most times. But except the news is so bad, that's when it destroys your technical analysis. A PDF about everything we have talked about today, and we will still come and talk about um what forex is. Louis, can you turn off your mic? We come back and talk about um what forex is and what it really entails. Every single thing about forex. Now let's move into the aspect. I'm going to just brush through. This is this is a class that should be done because it's quite broad. It has to do with um journalism. You have to be good at marketing. You have to be good at what you do. You can't say okay, you want to go into the aspect and you're not good at what you're doing. You're just going to ask yourself. You have to be good. You have to be a good. You have to be a, so the retail aspect of trading, basically you going through let's say you're done with, let's say okay, you're read, you have a strategy, you have mastered because there are so many strategies out there. And like I said, you have to find the strategy that works for you, that works with your mindset. If you're a gambler, stick to scalping strategy. If you are a long-term trader, well, a long-term strategy, think strategy. So yeah, you master that. You know you're good at trading. You know you're quite good, very good at make money. Actually make money every month, and I know I'm cashing out. Okay, I want to actually make more money. How would I make more money? I can actually start up because there's nobody except there are scammers. There's nobody that would want to start up a school or an academy. I mean, most people even can start up a non-profit academy just for people to know that this is their profession. People just want others to actually know, okay, this is what I do. And but most most people are even scammers. They don't even know what they are doing. They don't know how to trade. Just know how to market it. So talk about the retail aspect. Retail aspect is basically you know how to trade, you are a master at it, and you want to start a community. That is basic. So, like I said, you have to be at least you have to be good. You have to be good at something. Maybe your maybe let's say what you are doing, or maybe you are really good at fundamentals. You build a community around fundamentals. All you guys do is fundamentals. No one is there. Or you can learn technicals and open community teach about technicals. Now this aspect is actually cumbersome and it takes a lot of stress. It's not something that everybody can do. I mean, out of everybody here, out of 100 people, 90 90 of us, 90 of them would actually prefer to learn how to trade and make money on their own than gather up a community. I mean, like I said, you have to assimilate fast. You have to be, I mean, it has to be your calling for you to say, yeah, I want to go in that aspect. Then again, massively profitable. Um, you are a trader and you're also the aspect done. So that is basically what it's about. It's like selling yourself public. Yes, I'm good at it, and you are boasting that yes, I'm actually good at this, and I can teach you. Some will collect a fee, some will just because yeah, I just want you to. I mean, like you, an example of people that are into the retail aspects. I'm very sure you guys will know about. I don't know, but I don't know. Chance you know about Habi, Kojo FX, all of them. Know that okay, yeah, these guys are into the aspect of So I'm bringing up this part because I know that out of everybody here, out of every member on the XC channel, over 400 or something, at least percentage would be interested in the aspect. But I would advise never to even go into that if you are not at feeding itself. So now let's say going to see brush FX, and so I'm still going to brush to what is FX and every other thing. Going to brush to everything in the next 5 minutes. Just talk about what Tayo was. I'm going to just break down everything Tayo I'll be saying. I'll just use like 5 minutes. So basically, for short, Forex is foreign exchange. Done. Where currencies are being, everything you see through USD, these are actual currencies being traded by real people. Like I said, it's not Naira bet, and people come and be like, "Oh, Forex trading is just betting." Not like that. I mean, if you sit down, I know how much I can make if I sit down and look at my laptop all day and okay, I want to trade all day for a whole week. I know how much I can. It definitely is very straining. It's strenuous. No, I mean it's not that. It's not as fun, but I know how much I can make if I sit down with. If I sit down looking at my charts, I'm looking at the news and actively. So it's like a profession. Is it? And at least you guys know how profitable long term. Like I said before, and I've said it 1,000 times because I want it to reach people like you and me that are moving the charts. So the only work you have now, the only goal you have now is to the only thing you have to do now when trading, find okay, what are people buying right now? What are people selling right now? And just go with the trend. Forex trading is easy, to be honest. It so let's say two or three. First of all, find the trend. Where's the market going? Going up, going down, the ranging. Find where the direction is. Once you're sure about the direction, then find your end. I mean, if you keep at it, to you'll be shocked how much money you can actually make. If you're a gambler and you are really good at finding a trend and finding an entry, and you're a gambler, uh, I can guarantee you that feel like going to bank, draw money. It's not even going. You're not going to think too much. You're just good at finding a trend and getting a perfect entry. You can turn that's if you're a gambler. You can turn $50, $100, little tiny amounts, $500, little money like that, to thousands. As low as, I mean, I know people doing 100. I think $100, $500 over to 10K or so. People do it live. I mean, I've done tiny amounts too, and we are even going to go. We are going to even be doing live trading sessions where I turn tiny amounts into amounts live while gambling. Just knowing the trend. I mean, finding the trend, finding the market direction, and actually your end. So yeah, like I said, trading is finding the direction and hitting your end. So just so as not to waste too much time because we have very few minutes left. I'm going to be taking questions starting from the first question. Ore asked, if you have any question, you can put up, you can raise your hand. We'll answer. Also, before then, I don't know. I'm seeing people raise their hands. Hold on. Before then, Scott, do you want to? Can you give like a quick difference between volatility and forex stuff? Can you do a difference between before we move into the? An answer. What are you there?
Yeah, I'm here. I'm here.
Can you give like a brief difference between both or we
Okay, so hey guys, can you all hear me? If you can't hear me, I would like you to identify with the raise of hands.
Yeah, we can hear you.
Okay, awesome, awesome. So yeah, just to wrap up everything that has been said so far, the core difference between synthetic trading and currency trading is the fact that currency trading has to do with countries. Only countries have currency. So the countries in the international system, whatever is happening in these countries would definitely affect their currency. It could be a sudden news. It could be, I'm sure some of you know of the 9/11 attack on the World Trade Center back in 2011 or 2001, 3 thereabout. It affected the US currency. So things like that. Even what just happened, the Ukraine attack by Russia, it also affected the currency. We saw the market bleeding. Now, these are what are known as fundamentals, things that are both external and internal factors that can affect a country's currency, determines how the market will be like or how the market will go in the short run and in the long run. So, as a trader in the currency market, we all have to take note of the market of technical analysis, fundamental analysis, and market sentiment. So you have to know where the market is going to at that point in time based on your technical and your fundamental analysis. Now, for synthetic trading is wonderful in the aspect that there is no such thing as fundamental analysis affecting the flow of price in your synthetic market. So if your technical analysis is apt, you predict the market is going to a certain direction in a certain period of time, the only thing that can play against you is market sentiment. But if your market sentiment is in tune with your technical analysis, then you're just going to be printing dollars easy, or pounds, or euros, whatever currency that you're going to be like trading with. So that's like the sweet thing synthetic has to offer. Now, some people have this notion that synthetic is a scam because it is not like currencies, but they do not know that synthetic is the way I like to explain synthetic is it is a mimic of currency trading, but it has been padded up with every technical analysis you can find. And if you go online, you will see that you have like over 100 technical analysis tools and over 100 different strategies that you can apply to your trade. There are people that do ICT, there are people that do price action, there are different types of analysis that you can apply to your charts. And in synthetics, whatever analysis you are applying to your chart, you will definitely find an entry. There's nothing like one entry is being invalidated. The only time your entry is invalidated and you are very sure that your analysis is correct, then you know that it is purely market manipulation, and you just stay up the market that week. So market manipulation exists both in forex trading and both in currency trading and synthetic trading. Market manipulation plays out, but it plays out more in the currency market. So to further what's the word to further predict the market in an aptitude manner, technical analysis plays a whole lot bigger role, because technical analysis, you just do analysis based on the past to predict the future. Fundamental analysis, you have to know what is going on presently in that country, who is speaking, what policies are the bank implementing, what is happening in those countries. Is there a terrorist attack? Is there inflation? So you have to know all these things in order to keep being profitable in currency market. So I hope that sums it up for the explanation between the two. I hope you guys understand. And if you don't understand, we have the PXC group chat. You can drop your questions there. I'll be there to answer any question, anytime, any day. Thank you. So over to you, David.
So yeah, I hope you understand what you said. Now, just to round up because our time is up with what I'm saying. Just to round up, we are moving into question answer section. So if you have any question, you can queue all questions. If you have any questions, you can ask live now. And if there's not enough time, you can continue question and answer in our public group chat. So I'm going to queue everything, starting from I think already had the question. Starting from Ore, can I get your question? You said something about you're lost with the volatility. Can you clarify your question? Or are you there?
Good evening. Yes, I'm here. Yes, so when it was like teaching us, the network was not really good, so it was lagging. So I did not hear what it was saying concerning the volatility and indices trading. I
Volatility
don't know.
indices.
Is it the same thing as synthetic trading?
Yeah,
That's where I got lost.
volatility indices, synthetic trade. They are not different
Okay,
things. They're actually this. But do you understand what it's about?
not completely.
Just because of that,
Are we still
we're going to um class like a summary class, like a short class, and I would write on the group when having this because of when Tayo was presenting, lagging a lot. We're going to do another class, just a shorter class. I really want how this works. But you about to say something again?
okay? No, it's fine. Thank you very much.
On to the next person. Yeah, next person is
Okay, Idris Mohammed has a question to ask. So let's make it
Yeah,
snappy.
good evening, everyone.
good evening. Good evening.
Yeah, I don't know. I just want to talk about when is the class going to be holding because I just come around online and saw the class be holding, so I just tried to ask.
I don't understand you.
Okay, so the class is slated for every week, this same time every week. The time would change depending on the availability of the instructors, but it will still be around this time every week. So every Saturday, we have this Zoom class for the next 4 weeks, and if possible, it would extend an extra week or two. Does that answer your question, Idris?
Yeah. Thank you.
Okay, so one more question before we round up. Victor Oni or Barry C. Sampson, either of you should take the floor.
Okay. Yeah.
Alright.
Um.
Good
Sorry.
afternoon. Okay.
Victor, you can talk first before Barrison.
So yeah, what I wanted to ask about because I heard when you were talking about that most of all these transactions in forex are is banks, yeah, and you spoke about um the the currency like volatility indices and forex. You said volatility indices is basically synthetic. Then in terms of the currency pairs, you have to deal with technical and fundamental analysis, where you have to deal with like facts, like things that happens in countries, bank transactions. Let's say, like I'm trying to understand, or I'm trying to understand how that works. Is it basically only like news that happens in countries, or like also bank transactions, or how does it go?
Before I say anything, like, what do you?
Okay,
Okay,
Victor
yes, yes, you can
Oni.
take the.
Okay. I feel like the question you're trying to ask is the whole bank transaction, how does it affect the
Yeah,
currency? Now,
yeah,
in
yeah.
the currency market, in currency trading, every currency is tagged to another currency. So, in as much as a country is doing good, and another country is doing bad, if they are being tagged, like now, for example, the UK is GBP and the US is dollar. So GBP USD. If a policy is being introduced in the UK and it is well accepted by the public or by the news and the market, GBP will definitely get a rise over the dollar. The same thing if USD should release a news that is against the currency, probably a bad report of jobs, there were less jobs, or there was high inflation rates, or definitely just a bad news in the US. It means the currency that is tagged against the dollar would keep rising. Do you understand? So it just depends on what currency they are tagged to. The same thing with Australia, US. So, David, I would like you to put in the chat, the comment section of this Google call, the Forex Factory link, so they have access to it. So, guys, David will be posting Forex Factory. This is a site that you can go to check out what is happening in different currencies, in different countries, and how they affect the currency. So, by the colors, let me see if I can share my screen so you guys know.
I just want to add something to your Nico. Um, tell something about banks affecting price too. There's a very popular event that happened. There's a very important popular event that happened that really affects the chart bad way, especially when it's from the US. It's called quantitative. That is basically printing out new notes. You understand? It's basically printing out new um currency community, like, to the country. It's like, how do I break this down so it down to basically, quantitative easing is new money because there's no money economy which making or let's say let's use dollar for instance, making dollar much more available. And when something is available, uh, um, quality dies down. Like nobody would want it everywhere. You understand? Nobody would actually want that. If it's investors, investor confidence, nobody would want to invest in that country, which would probably lead to dollar going down. So when you see any news about quantitative, you know the direction already. Like I said, you have to find the direction of where the chart is going, where price is going. You have it in your head that okay, thing is going down, dollar is going. Find, let's say you're trading USD, dollar is weakening. The next thing that would come to your head, you are going to buy. We're going to have more interactive classes to understand. So I'll be sure everybody understand what I'm teaching. Like, um, so our in this book, our classes will be more interactive. Everybody, I'll make sure I'm carrying everybody along because that's the point. Can't everybody's lost. Don't really understand what's yeah. Um, Quantitative easing one way because it's central banks that 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 is one of the biggest way the banks prices affect the price of currency. Understand? Yeah, thoughts you can continue.
Thank you.
All right. So aside the quantitative reason, which David has explained, that has to do with bank printing new notes, and once they are, when there's so much money in circulation, the value of that money tends to reduce. So I don't need to like dive into the details back in the days and how it all started. So another thing that banks also do is it's banks that also announce inflation rates in a country. Like okay, it is them that know how the economy is going, so they advise the people in government, and then they tend to now release this thing to the public, like okay, this is how the economy is going. So the economy affects a country's currency greatly. Now if you look at this Forex factory, you are able to now see different news that are going to come out in the future, like different news that are planned out to come out, and you can see it for yourself. Now, the boxes that are light yellow, they are everything here is actually necessary. They are all important news. But okay, this is a news that is coming out that is not going to like to affect the economy, but it's a news that is coming out, so you have to like keep note of it. The one that is colored orange, and if you my mouse is on it right now, so that's CHF. SNB chairman Jordan speaks. It is colored orange, so it is like mid, like you have to pay attention to it, but it is not really glaring, like it's not a must pay attention to, but it will affect the direction of the market. Now for the ones that are tagged red, those are high impact news. So these ones are the ones that you have to like pay when trading currency pairs. You have to pay attention to this, especially when you're doing with odd, which is Australian dollar against any pair. It could be against USD, it could be against GBP, whatever. But whatever news comes out at this time, um, based on the cash rate or the RBA monetary policy, you know it is going to gravely affect how that currency will move. Whether it will, if it comes out bad, you know that all is going to fall. So any currency is being tagged to is going to rise. Then you now have to use your technical analysis towards that direction. You have to use it to support what the fundamental is showing you. Do you understand? So, and most times, all these news, when they come out, they basically even follow technical and market sentiments if you have done your analysis well. any news that comes out is always backs your technical analysis. There will just be like slight manipulation in order to take out either sellers or buyers that is going in the main direction. They'll go the opposite direction just to take them out. Just purely market manipulation. This is how the market makes money from traders. So if the market is going to buy and this news come out, obviously the first movement is that it's going to sell. Most of the time it's going to go against the main trend, just so that it will take out the buyers and sellers, whichever point that the market is moving. So that's it for currency trading. This particular site, forexfactory.com, you go there to find out the news that is going to be released, and you now know what impact this news is going to have on that currency that you are trading, that particular currency pair that you are trading. Now, for synthetic, which is volatility indices, you do not have to come and be looking at forexfactory.com. You will not see anything. The only thing that synthetic and volatility actually respect is technical analysis and market sentiment. So once you are able to know the market sentiment for that particular pair over a long period of time, it could be on a higher time frame as high as 4 hours or 1 week or 1 day or 1 month. We'll get into this time frame differences too as the class proceeds. So once you can now find out the market sentiment for that particular pair, then you can now input your technical analysis and filter the chart down to your entry time frame. So we'll get to like break all this down later in the class. But for what you should know, the main difference between between synthetic indices, which is also volatility, and currency is the fact that currency requires all three, which is technical analysis, fundamental analysis, and market sentiment, while synthetic or volatility indices just requires two, which is technical analysis and market sentiment, and you're good to go. Now, personally, I prefer to trade synthetic indices because it is not backed up by fundamental analysis. So I am not caught off guard because I have to like do other things. So I would not want a situation where I'm analyzing the chart towards a certain direction and then something just pops up on the news, and because I am not watching the news or I do not know what is going on at that point in time, I don't have time to go and be checking Forex Factory to know who just said what, or is it NFP week, is it inflation week, is it CPI. I do not know all those things. The market haunts me out, and most people will be arguing like, why did this happen, why did that happen? It only happened simply because you were not up to date with the news, or purely market manipulation. Do you understand? So if you have any other question, you can ask.
Um, okay. Sorry, can I ask again? Well, sorry, can I ask another question or another
Sure, you
question?
can ask.
Okay. Now you said market sentiment here and technical. So I'm trying to get something here. For technical, you said it has to do with in terms of like past and future, like timelines and things like that. But for market sentiment, like when like now when I hear technical, I have an idea of okay what technical analysis is. But like market sentiment, yeah, I know it's under synthetic, but what what like when I hear the word, I want to have like a pictorial view or like a broader understanding of okay, this is what I'm supposed to do or what this. Do you get what I mean? In terms of um synthetic.
Okay, so market sentiment is just basically you knowing the overall direction of the market. Once you enter the market, your first move is to know the overall direction of the market. Whether it's for that month, you need to know where is this market moving. Then you now filter your charts down to a lesser time frame. Now, the only way you can know is the market sentiment for that particular pair is by checking a much higher time frame, which is like either the monthly time frame or the weekly time frame. Once you have found out where the market is going to in that time frame, then you can now filter your charts with your fundamentals and your technicals. That's if you are trading currency. And if you're trading synthetic, after you have figured out the overall market direction for that pair on a higher time frame, then you can now filter your charts with your technical analysis down to as low as 5 minutes time frame. Do you understand? I would also share the um trading view link for synthetic trading and also the trading view link for currency trading. I would post it in the comment section right now. I hope that answers your question.
Yeah, that's fine. Thank you.
Okay, also just to add to what Scott was saying, to for more clarity, trading how do I break this down? Trading, when you lose, maybe you're buying USD and stop loss and lost. At that point, it's not um yeah, you can say the market's actually your money. That's the way you can take your, but I don't like using markets. When you are buying, you are with buyers, and you are with the retail traders that are buying. You are with the hedge funds that are buying. Hedge funds are like big, because I'm sure some people have questions of what this is. They're like, how do I put it? Let's say everybody here now, I tell them that okay, yeah, everybody should bring their money, put it in the box, going to use it. And um they don't just use technicals and everything. Just use their money to put the price up because a lot of money. And use the money to push the price up or put it down. That's basically what hedge funds just buy and sell. They just follow the. So basically, what I'm back to the point. Um, if you buy and it hits your stop loss, it means the sellers won. It's kind of like a tug of war between buyers and sellers. So if you are buying with the other retail traders, you're buying with hedge funds, you're buying with big banks and other people, other institutions. You're buying along with them. But if there are more sellers than buyers, then the sellers will make more money. You understand what I'm saying? So that is basically um how you lose money. You just know that there are more bigger when you're buying, there are more bigger retail traders, institutional traders, hedge fund managers, banks that are selling at that point. That is why you lost. That's why I keep saying find the direction. Where are all these people? Where are they currently? Are they buying? Are they selling? And then when you know it, then when you know the direction, you then follow. Like you have to calm down, wait that okay, wait for them to actually start buying, find the direction, wait for them to start buying, join the trend. I mean, that's the particular strategy we're talking about here. And if you master it and you are a pro gambler, you just want to gamble and turn your small $100 to $10,000, $5,000, $1K, then this strategy is perfect. I don't want to go into that now, but we are going to part of the strategies we talk about. Yeah, I just wanted to add. Scott have dropped some links to the chat too. Moving on before we round up. Terry, can you turn off your mic? So before we round up, can do any other person have? I think somebody, I don't know who, but I think somebody wanted to ask a question earlier. I don't know if he's here. Does anybody have any other question for round up? Okay, where is she?
Yes. I want to, hello?
Yeah, yeah. I can hear you.
Hello?
I can hear
All
you.
right. I want to ask, although the lessons that was taught today, I grab it. I was okay with it. But the question I want to ask, apart from that, do people have another signal group or something online?
Yeah, we. You mean we have a signal service?
Yes.
Yeah, well, it's limited. You understand? Yeah, we have a signal service, but it's not open to the public. We have batches open every month, and we take a limited amount of people. Don't just everybody. Originally, PXC is an educational platform, not just signal. But because of high demand, but then again we are going to be taking very few monthly. New batch will be open soon, and know about it. Just have to be on the channel and active on the channel because slots are very few. Take as low as three per month. Yeah, we do have a signal
Okay.
channel.
All right. Thank you.
Welcome. So before we move on, any
So,
other question?
yeah, so to round up here with what you said last, you said like finding the direction, basically like knowing more. Let's say the winner is definitely if you have more buyers. That's the winner. Like in terms of buying and selling.
Yes.
Like wow. So
Okay.
is
So
there like
yeah.
what? What?
Okay. So what to be sure about what you're asking? You said like I said, it's a tug of war between buyers and
Yes.
sellers. Yes, there's a technical analysis. There are trend lines. You understand? So if there are more buyers,
Um,
buyers will
so is it
win.
like there's a way that you can know from like looking at the charts that oh we have more buyers than sellers here, we have more sellers than buyers here.
But
Or let's
there's no definite way because it's humans, like it's people like me and you that are buying and selling. You understand?
yeah,
But there's a particular strategy I use. No, for instance, now you have maybe you're using one of PX's strategies. You make an entry, you make a trade, for instance, and the trade didn't go well, like it's not moving fast in your direction. You know very well that buyers are not so. You understand what I'm saying? When let's say you are buying Euro USD now, for instance, or you are buying a crypto um token, and it's not going up, maybe it's not going up as fast as it should. Like you buy it and it's not really moving, then you know that okay, buyers are not too much.
more people are selling,
Yeah,
selling
more
out
people are
than
selling than
selling
buyers.
than
You
yeah.
understand? Then again, there's this. I don't know if you follow the channel well. There's an indicator we use. That indicator kind of shows points. It kind of measures buyers and seller sentiment. So when you hit a particular level, you know that okay, the buyers here are not so much. There's no need trying to force it. If it's you understand. And apart from that, the Magna indicator I post, there are other ways to actually check. In fact, using default it on the chart. But the best way was what I just said. When you buy a particular pair and it's not moving fast in your direction, you're waiting 1 hour, 2 hours, 3 hours, and it's still ranging in that direction, or in fact, it's in small loss. There's a very high chance it's stop loss. That's just fact. And most people be in denial and be like, ah, no, 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 it must hit my TP. Don't worry, I'm sure it will hit. I have hope it's going to hit until it hits your stop loss. Sometimes you have to take your loss, move on to the next one. Those that win do not waste time too much. That is one thing you should just remember, no matter what. And we are talking currency, we are talking volatility indices, we are talking crypto. Trades that actually go well do not waste time. Don't waste time. So I hope I answered your question. So,
Yes, yes, you did.
alright,
Bless. Thank
fair
you.
enough. So Amazu Innocent, you had the question.
Yeah, yeah, I did. I was going to ask about the retail aspect of trading. So you said something about scalp and long-term strategy. Please, can you like talk about it again?
I didn't really hear you. I can't really hear you. Can you come again?
You said something about
retail aspect of trading, where you talked about scalp strategy and long-term strategy. Please, can you talk about that again?
Okay, so I said as a retail, like if you want to go into the aspect, you have to master trading itself. You have to be a master of what you teach. Like, and I said, okay, for instance, you have to, especially like when if you want to be a master of trading itself, I suggest you like a unique aspect of it. For instance, now personally, I prefer scalping than long term. I do long term too, but I prefer scalping. So scalping basically, let's say you want to start a retail aspect, you want to grow community. Maybe you start with your friends and be like, okay, maybe you add all your friends to a group. Like, okay, I want to start a community, and all your friends know that okay, you're very good at this scalping strategy. You're good at it. Um, okay, let me break down the whole scalping thing. First of all, scalping is short-term trade. Buy EURUSD for instance, and you make sure you close it that day. It doesn't last highest. It doesn't last up to two. Well, last, I mean, highest is just long-term strategy. Long-term strategy is more like swing trading. You are analyzing on bigger time frames. You are working with H4 daily. You can hold that trade for a whole month. You can hold that trade for a whole month. And you can you can say, okay, yes, I am a long-term trader and this is what I do. I mean, if you are specific long-term trading or scalping trade, easier for you to grow your community. You understand? Break it down again. Scalping strategies. Scalping is basically short-term trading. Buy a particular. I mean, it's good for people that I have said gambling so many times, but I do not suggest it. And I only suggest it for people that know what they are doing. So yeah, scalping strategies are for people that like gambling. They want to just get that quick cash, or they have a big account and they just want to be making profits daily. They want to be seeing their profit daily. People like that analyze on charts like let's say from 30 minutes, 1 hour, um yeah, let's say maybe for instance now their filter charts are like H1, that is hourly chart, that's 1 hour chart or 30 minutes. And then they move their entry chart, which can be like 3 minutes, 5 minutes, or maybe in some cases 15 minutes. You understand? Long-term traders, their entry chart can be as big as 30 minutes, H1, H4, and their filter charts can go as high as daily, monthly, weekly. Long-term trading is for people that are actually more patient and have like yeah, mostly patient. And you want to just put your money there and just wait. But others, there are some people that just want to get their profit. They like to see their profit daily. You understand? So I hope I answered your question, differentiating what scalping and
Yes.
long term is.
Yeah, you did. Sorry again. Market sentiment. So
Okay.
you said something about it being. I didn't really get the market sentiment part of it.
Yeah,
Can you hear me?
said the market sentiment, yeah.
Yes. You were. The market sentiment is it related to the currencies of the country, or I didn't understand that specifically.
The market sentiment basically finding like I said, it's like a tug of war. Buyers and sellers are
Okay.
dragging. So I mean, if there are a lot of buyers, it will go up. If there are a lot of sellers, it will go down. You understand?
All
Market
right.
sentiment is just seeing where these guys are going to. You understand?
All right. So
This
more like a direction
yeah, more
to
like a
the trade.
direction. Understand?
All
Where
right.
the retail
Thank you.
traders are buying, where the institutions are buying or selling, where the banks and hedge fund managers are buying or selling. You understand? In the end,
All
somebody is
right.
going to win. You understand?
Yes, I do. Thank
Yeah.
you.
So yeah, trading is like, I mean, looking at the chart is like understanding a different language on, like speaking a different language. When you look at the chart, you just need to like learning a totally different language. When you understand how everything moves, like I said, it's like going to the bank to print. Too easy, make money from. So yeah, I'm going to take one more question because this bootcamp is supposed to be 1 hour. Well, now I think it's reaching like 2 hours. So I'm taking one more question, then we round up. So who? I don't know. Active Beatboy, do you have a question?
Yeah, I actually do.
Okay, love it.
Okay, yeah, actually, my question is that is it possible for us to get a
I can't hear you.
recorded class of this or maybe probably Telegram group or
Come again. Come again. I can't hear you.
something? I don't know.
Can you hear me?
Can you hear me?
Yeah, you're lagging. I can barely hear you.
Can you hear me?
Yeah, yeah, yeah. Hey.
Can you hear me?
Yes, I can hear you.
Yeah, I was asking if it is possible for us to get a recording. Yeah.
Yeah, sure.
All right, all right, all right.
Every class
Actually,
is
that's
going
just my
to be.
question. All right, all right, all
Yeah,
right.
every class is going to
Any
be.
classes?
Class is going to be recorded. All classes will be recorded and sent to the channel and group.
Okay, all right, all
All right,
right.
so yeah.
I appreciate it.
All right,
Thank you
all
very
right, all
much.
right. No problem. So yeah, that would be our last question for tonight. As we are rounding up, also you are preparing like a gift package and more details said public group. We are going to be giving away um an account, register an account with up, and our next class where we are going to be talking about strategies. You can use that to be testing out the new strategies. Done. More details on that, and we are rounding up. Thank you for joining the class. I hope you learned a lot. Class will be recorded and uploaded for people that want to go back to it. Good night and God bless.